Support and resistance will determine whether you are going to make so much money or not in this market. Hi guys, welcome to my YouTube channel. In this video, I will teach you about support and resistance. I'll teach you some things you need to look forward to. Guys, support and resistance that works are very important. See, I know there are a lot of ways you can do support and resistance, but I can guarantee you that this simple tip I'm about to teach you has able to make me so much money, and I have a lot of proofs about them from my Telegram channel. If you're on my Telegram channel, you can always see all my signals that have always been so accurate. And if you've not been on my Telegram channel, you can easily join with the links in my about. When you check the videos, you'll be able to see, when you check my signals, you'll be able to see how I'm able to accurately predict some signals, and they're able to go in at a very massive profit. So guys, support and resistance means areas in the market where buyers and sellers are willing to buy or sell a coin. Like, and one of the reasons why it is self-fulfilling is because, guys, millions of people, thousands and hundreds of thousands of traders are looking forward to buy at that same region. So because everybody is buying at that same region, there's a force, there's a money push, there's a money force that actually enables that trade or that particular thing to actually work. So support and resistance is not that they just automatically get there. It is because people are actually buying and selling in that region, and you need to join the masses. What the masses are doing, if you're able to join earlier, you'll be able to make more money. But guys, in this trading, you need to know that the market is here to make you lose money, but also give you a lot of opportunity to make a lot of money. So it is not your choice to either do some things right or lose money. So without further ado, let's dive right into the video. I will appreciate if you can subscribe to my channel, and I'll also love it if you watch all the full video today, because that's where the real and the old glimpse is. I'll see you in the videos. Let's dive right into the video, guys. You use them for trading and investing decisions. So key levels are areas in the market where the market has 99% chance of respecting it, period. So there are some areas in the market that once you draw your key levels, that is your support and resistance on that level. If you go on lower time frames, the market will respect this level because they are key levels. So I'll be using Polkadot USDT as an example, as a case study. So to draw your key levels where the market will surely respect, just go to the weekly time frame. Go to the weekly time frame, guys. Go to the weekly time frame. So let me try and backtest. Let me try and enter the backtesting mode. Okay, let me enter from the monthly time frame. Let me enter the backtesting mode. So let me go to the weekly. So on the weekly, right, you have to draw those support and resistance in those region. When you draw those support and resistance in this region and you go to the lower time frames, the market will respect it even on that same time frame. So I know you guys know the rules of support and resistance, right? That it must have at least 2 to 3 touches. One, it must be obvious. If it's not obvious, then it is not a key level. It must be significant. So I've drawn my levels this way. I've drawn my levels this way. Let me clone this. I've drawn my levels this way. Let me clone this. Then I've drawn another levels this way. Now, these levels that I just draw, anytime I go to the lower, because obviously this is the weekly time frame. We don't take trading and investing decisions on this weekly time frame. Why? Because the candlesticks are massive. So what will happen is I'll go to the daily. Now, on this daily time frame, I can slightly adjust these levels. I can slightly adjust them on this daily. Now, on this daily, I can be very sure that whenever the market gets there, it's going to react to it. So, for instance, now look at this. The market is on this support that we drew from the weekly time frame. So, if I proceed with this, you see that at this point, this market bounced up. The market bounced up. So, again, if the market gets to this region, it's going to react to it again. Now, key levels, they are so important that whenever the market is about breaking into the upside or breaking into the downside, the market will take in so much extra effort, and that's where you see very long candlesticks. So let's proceed with this trade. You can see how this thing. Now look at this. Look at the strength of this candlestick that broke these key levels. So key levels are where, now if you buy and sell at key levels that you draw from higher time frame, and you go to that time frame like daily, weekly, or 1 hour to buy and sell from them, guys, you need to know that this thing will respect it 99% of the time. And by the time it's about to break out, there will be this very long candlestick. You can see this candlestick here, right here. there will be this very long candlestick, so you can be very sure that okay, fine, this trade is not this region is no longer as important as it was before, right? Now, again, see on this daily, look at how many times the market respected it. 1, 2, 3, 4, 5, 6. So this was resistance at this region where my cursor is. It turns to support, resistance 7. This is 8. So now it has broken into the upside. Now this is now support, meaning that in the coming decisions I'll be making, I'll be willing to buy here on lower time frame, guys. I'm willing to buy here on lower time frame. So let's see how this goes. Now look at this again. The market got here, bounced up, got here again, bounced again. You can see how now see if you make a buying decision, let's say you go long at this region. Let's say you go long at this region, you'll be in profits. Now, why? Because you know this simple concept that when you buy on key levels, when you trade, when you buy and sell on key levels, what happens is that the market will surely respect it 99% of the time. And if it's about to break it, there will be this very long, maybe bullish or bearish candlestick that will form, which shows that there is a lot of buying or selling pressure that came into the market to invalidate that level. Look at this again. The market is still coming there. It's still now. Look at this. We've just experienced a breakout of this region. So, guys, you need to know that support and resistance will exist as long as it has not yet been broken. Immediately it is broken, period. Get out. Get out for a long or get out for a short and trade in that direction. So look at this very long candlestick. I can be sure that if the market gets here again, it's going to react and we're going to break it. There will be this very long candlestick. Now look at this. Support is now resistance again. Now I'm expecting a bounce up at this region. Look at this. There's a bounce up here again. So at this region, because now it is self-fulfilling, it works because a lot of traders are also looking forward to trade at that level. So because a lot of traders are also looking forward to trade at that level, it makes it self-fulfilling. It makes it become something that will eventually show up. It makes it become something that will eventually work because, guys, this is a very strong level. So this is just the simple thing about key levels, which are the support and resistance. Draw them from the weekly time frame. I'll see you in the next module of the course.